Welcome to Drill Down Earnings. We have quarterly results out from Coherent. This is one of the 50 most important companies in technology, and I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. This is a stock on a move. We don't care about the stock. We care about the business, the technology business behind this. Is Q1 earnings of, we're expected to be $1.4 billion or 1.5, so better than Wall Street's estimates. Earnings also better than estimates. But what's really important about this company, they sell optical transceivers into the telecom world and maybe more importantly into the data center. So AI has driven a rebound in this business. It's doing quite well here with a recently appointed CEO, Jim Anderson, at the helm there. So revenue, as I mentioned, up 4% sequentially, 24% on a year-over-year basis, driven by AI data center, and telecom starting to come back, which is really good news for the companies that make products for both. Gross margins also getting better. I want to get into the details here. So their iridium phosphate scale-up business, building up that business, has gone quite year-over-year capacity tripled, and they think a 6-inch wafer, these guys sort of make silicon-based products, making products and wafers, not semiconductors, but optical transceivers using lasers, so important for them, and they say their output, I should say, is getting much better as they scale up there. And their 160 gigabyte transceivers, or 1.6 terabyte, depending on how you look at it, using really cutting-edge technologies like VCSEL, the VSCEL, which stands for Vertical Surface Cellular Emitting Laser. Basically, it's a laser that just shoots out of the inside of a chip, which could be used someday for the co-packaged optics, which is sort of the ultimate dream of this industry, where you could actually have a laser built into a semiconductor, so you could process all the information in the semiconductor and beam it to wherever it's got to be using a laser. Just amazing stuff. They say that they're working on this, they're starting to get there, but in the short term, they saw margins slide a little bit. Their operating margins down a little bit. Now, when you look at this business, yes, they sell all kinds of stuff to all kinds of companies, industrial, electronics, instrumentation. But this communications business, whether it's AI, data center work, or telecommunications business, is really driving strong growth. And as I mentioned, on a sequential basis, up 9%. We've seen really strong growth sequentially, one quarter after the next for 2 years here. And communications is really driving the growth. The rest of those industries have been relatively flat for this company, but communications driving everything. How'd the stock react? Well, stock initially sold off, and during the conference call jumped a little bit. Let's call it down 3% with the very last end of the conference call. Yeah, down about, well, actually just about flat when I look at the end of the conference call. But for the year, the stock's up 26%. I should mention, full on, I've got some bias here. I own this stock, it's done all right for me. But you can gauge my words based on that knowledge of my bias. I also like the CEO, Jim Anderson. I met with him. It was the the OFC conference here in San Francisco just a couple of weeks ago. Really seems to be a real straight shooter. He's got that wonderful Chicago accent, or Chicago accent? No, he's from the Twin Cities, Minneapolis, St. Paul. But Jim Anderson talking about what's happening with the 1.6T, or as they call it, 160G. They're the only one in the industry that calls it that. Everybody calls it 1.6T. Transfer rates. That's going to be an amazing change. And some data centers, it look like we're waiting to take those orders, but they say the ramp's starting. It's going to go on through the rest of this calendar year and into the following year, and he's still confident in that. Listen to Jim Anderson. We
still continue to expect revenue to start this calendar year and then ramp through the course of the following year and beyond. And then one of the things that we're seeing in the industry, which has changed versus, say, a number of years ago, is we're seeing these faster adoption cycles of new data rates. And so we're seeing overlapping cycles. And so we expect 800 gig to continue to ramp as the 1.6T adoption starts. So we still expect 800 gig demand to remain strong, I would say, into next year as well, with 1.6 kind of ramping on top of that.
All right, what's this all mean? What's the one number that tells you a whole lot? What's the drill on earnings bite? Well, I've got that. So Coherent Q1 earnings, here's what you really need to know, your essential summary. $1.5 billion in revenues, better than Wall Street expected. We don't care about Wall Street, we care about this amazing company, a stock that I own, fully biased out there, so you know. But the revenues are up 24% on a year-over-year basis, and have been really steadily rising now on a sequential basis for almost 2 years here. And it's driven by, and here's your drill on earnings bite, the one number that tells you a whole lot, 58%. The AI data center business, the communications business on a year-over-year basis is up 58%, and that's just fantastic. for this important company in AI technology. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.